Okay, what's going on? What's going on? Good evening. Today is actually Sunday, August the 10th, 2025. And what I'm going to be going over here over the next 15, 20 minutes is going to be the DRC for Tuesday, right? So I did upload Monday's DRC, those buys that we took to the upside, right? The continuation buys. Overnight price opened here, market open, as you can see here on the right screen. The 1 hour is going to be showing up and the 4 hour on the left. But we ended up taking buys in that New York session, right? That ended up closing back above that August monthly open, back above 23,300s, where we ended up being able to, once price came up into here and then broke higher at 10 to 11, we were able to trail some risk. And then price then reached up for that previous day high, and we were able to, um, secure more of the bag as the market made money available. Now, this was just a really, really good continuation buy, I felt like on Monday, just because of the fact that we had such a massive fall Thursday and Friday of that previous week. And so that made sense on what we've seen on that last video, the last DRC. And then now what we're moving into, what I'm going to break down on 15.5 in 1 minute, is how we actually found the shorts down, right? If you guys go back, and you guys look in the free Telegram for Omni Profit Capital, you can see based on the dates, or if you're inside the um, Telegrams when it comes to kind of close this down here a little bit. The Telegrams when it comes to Trade House, right? If you guys are inside of this one here, the free one, right? You'll see this, but I just have it pulled up here because I had it actually on the date. So you can kind of see like how we actually took these trades, right? So I was looking for shorts that morning. Now 9 a.m. when you look at Tuesday, the 5th, it was a little crazy, right? It was a little crazy. This was all three of the markets. You can't really probably see that as well. So all three of the markets were in that crown forming phase, and we were looking for that downside to actually happen. And so this is where Tuesday was, right in here. Okay, so we're gonna go deep dive into this very quickly. Um, so let me do that really quick. But look at the progression. I just want you to see like this is the weekly open, and then we made a high, made a higher low, made a new high, right? Went up and made another high. Obviously, some buyers took profit in this huge capitulation. Then we just continued up for that 4 hour supply candle that we were looking to reach to. But let's actually go down to the 15 and 5 first to kind of look at this. So I'm gonna do Alt G. That would have been Tuesday, 8:30. Tuesday, 8:30. Okay, so this price was very disrespectful, right? But it was really more about understanding where the daily open was. Okay, so I like to focus on point of interest, buy low, sell high, that whole thing, right? Understanding where you actually are. So 1700 hours, Tuesday open would have been here, right? And so obviously we have that August monthly open now. Pre-New York, what they were doing is they were actually, dragging people into these shorts, right? Now there was no way I truly believe that you could have, just came into this and uh thought this was going to go short at one point, because at one point as well it had come up and made this new high at 23,400, and then at New York Open, if we go back and mark that here really quickly, it actually started to show signs that it may have wanted to turn around, right? So this was 8:30 open right here. All right, so what they do, capitulation comes down, takes the overnight players out, right? So here takes that liquidity, and then from that candle here, this was 8:30 to 8:35. Now 8:35 into 8:40, this candle here, this is where I started to strike buys, attempting to attack, right? The high on day, which was 23,404 and a quarter, right? So like I was like, okay, cool. And usually, not usually, but sometimes I don't like to take this trade, but we were still pretty bullish, right? And we had overnight liquidity available, but we had taken, if that makes sense on that left side, and what you're seeing here, we had taken that liquidity, right? So to kind of deep dive now into the 1 minute, I'll go in here and show you guys what I was seeing, okay? So now on a 5 and 1 minute together, how it actually looked was it dumped here at 8:30, and then you started to see engulfing candles. But inside this engulfing candle, so this candle I'm talking about right now on Tuesday, right? Inside this candle right here, the price action that you're getting is bullish price action on the 1 minute, if that makes sense, right? So you have to be able to look at both of these to understand what you're seeing. right? You're seeing the individuals who short cover, right? You're seeing them come in right here at that New York Open, right? They come in, they drag people and they go ahead and take that overnight trader. Now those individuals cover, right? And when they cover, buy orders fill. That's what I learned from trading, futures, right? And so for me, I seen the 831, the 832. I'm, still analyzing price at this point. 832 to 833, 833 to 834, and then we came down 834 to 835 for the 5 minute close, right? And then we failed to make a lower low here. We actually made a higher low. So I didn't strike right here, right? There was an 835 candle, 836 to 837, and then I started to attack 837's 837 into 838. I started to attack long positions inside that 5 minute location to essentially what I wanted to get was this, right? So I was just looking for, we took that low on day, we could break out of this area and possibly create some expansions and some of our trailing risk rules, which would have been awesome. So that's what I was looking for. Now, to kind of go into what happened at 9 a.m., right? And this actually ended up being when you look at the overall week, like I showed 4 hour and the 1 hour in the beginning, this actually happened to be, I believe, one of my best trades of the week outside of Friday's trade, right? Friday's trade was, amazing. The extension up was crazy. But staying focused here on Tuesday, right? So at 9 a.m., as you guys can see right here, this was 8, so the 5 minute on the left, right? So 850 to 855, 855 into 9, and then they, right when price opened at 9, right, the exact minute, they gapped the price. You guys see that? So they went from 23,378 and they gapped back down below point of interest back into demand, probably drawing in more buyers at this point, right? But what had happened for me is I had entered in these buys here, and as price made money available and made this strength candle here, 845 to 850, I started to trail some of my risk and cover half of my position, right? And so when I did that and they spiked down at 9, all they did was take half my position and the other half of the risk was at the LOD. As price started to kind of hover, right? This was the next minute candle, like either after they spiked down, right? 9 o'clock. 901 to 902. So this candle opened here and closed here. Next candle, 902, 903, opens here, closes here. 903, 904, right? And you're starting to see body closures of candles starting to break down. But the most important part for me was that price couldn't get back above point of interest, which was daily open and the New York Open. And it was like where we were at in the range, this was a very high area for a demand buy to actually work out, right? And so like if you didn't have any type of protection plan or your preservation of capital plan, whatever it could be, right? If you weren't getting that structure break and that your sign of strength, then you had to be able to protect yourself and be able to adapt in this moment. Now, this wasn't my most perfect trade, right? But this was a very legit trade when it came to how I ended up finding the shorts. Okay, so as we started to see price, go against this position on the buys, I ended up. This is one of the one times when I manually cut the position because I was like, I have no idea what was going to happen after that 9 a.m. And I just didn't want to be susceptible to risk at that point because price was actually hovering still right around where the area I had got into the trades around the 334s. And so price comes up 908 to 909, right? And does that capitulation kind of draws in probably more buyers on a 1 minute. And then it comes up again, right here in that 910 to like 9:15 time and hits that area, right, where it continuously is making these, right? When you actually look at the structure, it's making lower lows and lower highs, right? Like in this area here, right? So price is failing inside the 5 minute demand candle at that point. Now, where I started to look to go short was honestly to me a little bit late, but it was just because of how everything was playing. They left a gap in the 70 levels. But when the 5 minute candle, like we had one candle here, 905 to 910, comes up and tests the area, and then you have one candle close here, 910 to 915. When this area came up and tested that August open, right? This is where personally, like I said, it's not late trades. Like when I see people do this on buys, it's not late. It's just you have to make sure that it defines edge and the location makes sense that when you're taking the trade, you're looking left to where you want to get to, right? And attacking like legitimate liquidity. So how I was looking at this after I got the 5 minute close here was the candle to come up. And when price would make a lower low and then make a lower high, I was looking for an edge, just something like this, right? Nothing crazy, just something that was going to continue down, right? And look for the liquidity from the major gap that we had from that day before down into here. right? So into those 23,200s and lower, right? For 130 plus handles is what I was looking for. And so that's what we got, right? And that's what you see on that picture here. Let me pull some of those up here again. All right, you see some of those from that day. This is 8-4. So we're gonna pull up 8-5 here really quick. All right, so we have a lot of those. So that's what we ended up getting for that day. And like I said, this ended up being one of the better days, but it was one of the most manipulative days of the week with that 9 a.m. gap. So understanding framework, understanding how you're going to frame up your trade, not just being like a 1 minute or 100 tick type trader was very helpful on this way down. Then looking at this, let me look at this here again on that 5 and 15. Okay. And then on the 5 and 15, that's pretty much all that we ended up wanting to see. So as that price started to fall in our favor, we ended up falling out of the area of the 23,323s, like where we got in our entries. And price started to break here. This was like 920, 925, 925 to 930. You know, buyers kind of acted like they were going to step in, even though they had already taken Asian liquidity. And then from that point on, I mean, from the range from the previous day or from the market open, let's just say like right in here my eyes were glued to here, right? Because if if they were willing to go lower than here already, right, and they were breaking lower, it almost made sense for them to fill the gap, like we ended up seeing. So that was pretty much Tuesday. I wanted to kind of keep it, kind of short and sweet when it comes down to it, because like I said, there wasn't that much that there was a couple things that I could have done differently, right? Like when you're looking at that actual DRC, um, template is there's a couple things that I needed to make. Is one is I don't need to hesitate in certain parts of the edge, which is always. But the other thing is just identifying, I would say, right? 15 and 5 minute supply a little bit better. So like I had a 15-minute supply candle here. You guys can see that here. Uh, Excuse me. So I had a 15-minute supply candle here, but I also had, when they gave me the framework, a 5 minute supply candle, right? So they really never broke the sell side of it. And that's what we were looking for, right? If we were buyers in that situation when we bought down in here, we were looking for price to break through that area, give us some down candles up trending market to be able to secure some risk. But they weren't doing that. And so that's why it made sense to wait, I thought personally, for the break here, then the push up, then you could put your risk here. So if you had like you could put your risk here, or you could have put it on that smaller time frame where I showed. But if you put it here, right, and you were getting in like in that August open, you had about a 25-point risk to that New York open, which to me in that situation, you guys will, hear it through my different recordings, but to me that would have been like a C plus B, setup, right? Because anything where I have 25 handle risk, I need to do a little bit less volume. I'd rather have that position a little bit higher, right? Inside 5 minute supply, inside the 23,380s where I'm risking like HOD, and the maths out, right? So really nice capitulation throughout that. And then just to go back to that higher time frame to kind of see what we were looking at for that week, 4 hour, 1 hour here. All right, just to kind of get the location of that area. So now, as you can see, right, as we've come up, it's a system, right? We started to buy up throughout the week, right? We came up to Tuesday, and what did we do? We sold off for Tuesday, right? So now, kind of start looking at this right now, overnight price, right? For Wednesday, I'll go over in the next video. So, right, so we're gonna keep continuing the DRC of just kind of what areas we took, and then we'll finish this with a weekly review. But Tuesday finished, right? Sellers, think about this, right? Sellers have to make money, they have to take profit, especially on futures. They have to have buy orders filled, right? So we also took shorts on CFD, right? You have to check the price on this on the CFD, but it's the same thing. But we started to sell some of our market open positions from CFD, right? So we were anticipating that if buyers stepped in overnight going into that Wednesday, that we probably were going to see continuation, right, for the Tuesday's highs, and that we were going to continue up on the 4 hour range, right? So that's kind of like where we're at in the story of things. So appreciate you guys watching this Tuesday DRC review. Make sure, like I said, that you have the document. I'll pull it up in the next video so that you can make sure and just review what we're looking at, and we'll kind of touch in on certain things. The main ones are going to be on the best days, obviously improved upon. Things that I may have learned. Uh, and then obviously the changes I need to make from today. So like one of the things I just want to share with you guys I need to learn from today is, like I said, is that just that 15 5-minute edge, really just identifying that, making sure that I have those areas and locations already in the pre-snap read, right, in the pre-market outlook. So like I said, again, appreciate you guys watching this, and be on the lookout for the next one that goes into the next phase of how we ended up seeing the continuation up, right? And throughout the rest of the week, we ended up seeing that continuation up into, right, the 4-hour supply candle all the way from this market open, right? So we'll go over that next. I appreciate you guys watching. See you on the next one.